Okay, welcome back. 55 points in the green. Things are looking, the same, basically, from the word go this morning. 50, 60 points and a little bit of up and down, but, it's kind of holding that much, at least 50 points since the start. Unmesh Sharma is head of institutional equities at HDFC Securities. He's joining us now to talk about markets. Unmesh, good to have you with us here. Thank you very much for your time. Just tell us broadly, Unmesh, what is the sort of big thrust of the HDFC institutional equities team? Are you guys? How are you looking at markets? Are things looking very good? Are things looking a little extreme, overdone, which means perhaps we may spend sometimes in a sideways kind of action over the next many weeks? What's the overall sense?
So you are making a very interesting point now as to how narrow the markets become. If you look at how it's been, tactically playing out in the very recent past, globally, a lot of the large indices are being driven by a very small number of stocks, including the United States. You look at what's happening in India, it's been in a very, very narrow range. Now, to a large extent, it's a sign of confusion. Generally tends to tell you that, the bulls and the bears are kind of equally weighed and really nobody knows what is going on. Volumes also haven't been, with the exception of blocks and here and there, it's not been great. So if you look at it, the market, seems to be positioned at a point where the participants are trying to make up their mind which way they want to go. Now, it would have been easier to take a call if, the market was like a standard deviation below mean. But right now, just to put into context, our FY24 earnings estimate for HDFC Securities strategy team is around 3 or 4% below street. So we are looking at a 12% growth, which means the market's almost 20 times, right? In this context, the market continues to drift given that the flows are there. But if I had to really, bet on an outcome, it's more likely to be down than up. So we are quite cautious. We don't expect to see any positive news coming from the macro front, either in the Fed or in the RBI. So, and with all the imponderables around inflation as well as what happens in the monsoon, we are a bit cautious on the market at this point in time.
A bit cautious at this point in time. HDFC Equities has coverage on a lot of mid caps and some small caps as well. So coverage breadth is very large. For stocks under your coverage, active coverage across analysts, I mean, again, this is a bird's eye view I want from you. What kind of upsides are you projecting on an average for in the 101st to say the 200, 250th stock, which is under your coverage?
Yeah, so we cover 230 plus stocks. That's and that every sector really. To a large extent, what's happening is that the way in which we are looking at the market is natural bias in the mid cap space when you do coverage is usually we try to find ideas which are going to make money in the long term. So what you will find is that naturally there is a bias towards having a bit more of the buys and the ads because we have a 4-point scale, right? And you will find that there are a lot of long-term bets in there. So for example, in IT we have ER&D companies under coverage, or chemicals we have these specialty small chemicals names in place, or financial inclusion we go down to the brokers and then to the AMCs and all of that kind. What you will find is that in general, our long-term view on that space is very positive. We continue to believe that wherever we are going to see earnings delivery, given that valuations are expensive, there is going to be mid-caps outperforming the challengers, so as to speak, outperforming the large caps. This is our core thesis. Now, within that, however, at this precise moment in time, we are a bit cautious on the market. So what we could see is that there could be a lull in activity in the mid caps. These are generally higher beta, so they tend to react negatively. But we have very high conviction that if you look at our model portfolio, especially some of the industrials, power, utilities, domestic kind of economy facing sectors, even some of the smaller banks, we would actually be adding into those names over a period of time. So yeah, longer term, we continue to remain quite bullish on the mid-cap space, but short term, you could see some challenges there.
What about ER&D companies? You mentioned them. names like Cyient, Tata Elxsi, LTTS. Last week, the Cyient was on fire. It completely got re-rated, and everyone was wondering what suddenly changed for these companies. But since then, this week, we've seen some, the stocks getting sobered up a bit. Where do you stand on the ER&D stocks? Do you think that they've gotten a bit overheated?
Yeah, so we love that space, right? We've had Cyient, for example, in our model portfolio as a 1% kind of alpha position, which is quite meaningful if you see it in the context of the market cap for a while now. See, needless to say, if you look at the short term, with stock having doubled, I think in 3 months or something like that, I think this as well as the the others like Tata Elxsi and all that, while they are very positive on the long term, I think that there will be some kind of valuation kind of convergence, if I may. Will it continue to remain at a premium to the services? We believe yes, but the premium might actually come off in the short term. Does that mean that you kind of sell and walk away? The answer is no. We'll probably want to add. But at this moment in time, the relative value within the IT space, given all the uncertainties which are there, we find that it's easier to find mid-cap, bottom-up ideas in the space as compared to playing the overall macro theme given the global recessionary environment in this space. So ER&D, yes, but having said that, in the short term, you could face a little bit of cooling off on that.
All right, Unmesh, good chat. Thank you very much. So short term cautious, but broader markets, mid caps, etc. Bottom up, a lot of potential as earnings growth will compound over many years to come. But near term, caution warranted. We'll take a quick break here. We are back. We take a quick note of the RBI monetary policy decision tomorrow. We'll get you the preview. This is CNBC-TV18's RBI MPC poll coming up in just a bit.